this week's Gold and Silver Club end of week review for the 4th of July 2014. Today's session will, of course, be presented by myself, Phil Carr, at the Gold and Silver Club. Today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover a end of week summary for the commodities. We'll look at gold, silver, oil, natural gas. We'll look at the agricultural markets. We'll have a look at how non-farm payroll affected the markets too. We'll be looking at the top trades of the week. We'll of course cover live market commentary and technical analysis. We'll look at the week ahead, so the key events looking forward, and we'll be covering any questions you may have too. So this last 24 hours, we've seen the US non-farm payroll data beating expectations. Gold prices closed the US trading session slightly lower, but up from the daily low on Thursday as stronger than expected US employment data put pressure on the precious metals. The most anticipated report of the month, the US labor employment report for June, showed non-farm payroll increased by a higher than expected reading of 288,000. So it beat the expectations of 215,000, following Wednesday's the better than expected reading from the ADP employment report, which was up 281,000, provided traders with an early indication that the Labour Department non-farm payroll number could come in stronger than forecast. June's non-farm payroll report marks the fifth month stretch of job creation in excess of 200k since the boom years of the late 1990s. So a streak such as this has not been seen in over a decade. This now puts greater focus on the upcoming release of the FOMC minutes, which will be released on Wednesday, for greater insights into the monetary policy, the Fed's monetary policy, as well as future clues on interest rates, GDP, inflation forecasts. And as we enter a three-day weekend in the US, in observance of Independence Day, the US markets will be closed this afternoon. In this calm before, is this the calm before the storm? So we'll soon find out. So we've still got the UK markets, which are open at the moment. So there's still been some activity, although quite reduced. We'll take a look at the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I train thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. He also regularly writes for a number of global business and financial publications, with appeared frequently on financial TV. So that's a bit of background on the Gold and Silver Club. We'll take a look at the price of gold at the moment. We're currently trading at $1,321 an ounce. So gold looking quite interesting as we come into the close of the week here. So we'll take a look at gold on the charts very shortly. Before we do so, we've had some decent trades over the last week, top trades of the week using the Gold and Silver Club signature trading strategies. First of all, platinum, which we actually took last week, has finally come and delivered. This has been a nice swing trade, which has come up all the way up to a 3-to-1 now, which the initial risk on that 90 points came up, hit our profit target, nice 500-point gain on that. And you can see we've come all the way up there. So $900 risk, so 90 points, $900 risk for each lot traded for a 500-point profit. We've also had a really nice trade come through this week for palladium as well. In fact, palladium has even broken out higher towards the end of this week. We'll have a look at that very shortly in the technicals. So again, this was a buy going back to last week. We had a great entry there, nice precision setup, and we came in just on the break of that, the highs there going back on the 23rd of June, and the risk on that was 50 points, so $500 for each lot traded for a 260-point gain, so $2,600 profit on that trade. We've had also some nice trades on oil this week. We did finally break down. We had this nice V-shaped reversal pattern on the daily here, broke down, broke support. The risk on that was 50 points for each lot traded, so $500 risk for a profit of 140 points, so 1,400 US dollars profit for a nice 3-to-1 for a short on Brent crude oil. And we'll go through some live market technical analysis and just take a look at how the markets are looking. So first of all, we'll take a look at copper. So copper, we've had a decent move this week, actually. We finally broke out of that resistance zone at 3.1991. You can see there we had a very key, level of resistance here. Nice neckline, V-shaped reversal pattern, really solid breakout over the course of this week. We've come up and found resistance at the 3.2865 level. We did discuss this last week, the V-shaped reversal pattern on copper. So this is a very straightforward trade to take, a nice breakout to the upside. That's followed through with momentum on platinum, on palladium. We've seen silver have a little bit of support here this week as well. Gold's the only one lagging ever so slightly at the moment. We'll take a look at gold next, actually. If you take a look at gold on the daily chart here, gold is just continuing to consolidate. We're consolidating between the 1306 zone up to the 1332 zone, so you've got a very clear level of support and resistance here. So we continue just to ricochet between those levels. What I'd like to see here is a breakout in either direction. So the price is really starting to coil up a lot now for gold. So we'd like to see a break either above 1332 for a decent breakout to the upside now, coming up to test the 1350 zone, or a break of 1306, which would see us break down and come back down to previous levels of support around the 1285 level. So whilst we continue to consolidate at the moment, there are opportunities to buy and sell just within this consolidation zone, but we really need a breakout, need a direction to give us the next move now for gold. So it's the longer it stays in this consolidation, the bigger the breakout that we'll get when gold finally does break. Silver's managing still to hold on to a lot of its gains from the FOMC announcement. We had a nice breakout above the $20 an ounce level. We've come up, and again, we are consolidating on silver between 21.30 down to 20.67. You can see yesterday we did get a pullback on the NFP numbers. However, that was very quickly supported, and we've seen just a nice hammer form on the daily, and we continue to consolidate on silver. Again, we're looking for a clean break to the upside here, just above the resistance zone that silver is currently in, for a pop-up initially to the 21.50. Then we're looking at key levels above 21.77, 22 US dollars an ounce will be a psychological key resistance level. If we get a break below 20.67, we expect to move heading back towards the $20 an ounce level, which was the breakout point from the FOMC announcement. So we are just continuing to coil at the moment. Now, given that copper has broken out to the upside, and we've got some good upside here on platinum and palladium in the last week, we would expect potentially more confluence here. So I'd be looking for a breakout to the upside rather than a sell-off here at the moment, but we'll only take the trade once we get confirmation. If we have a look at palladium, palladium's done well again this week. Palladium broke out again over 3-year highs. Palladium market this year is up 25%, one of the best performing commodities of 2014. You can see we're in a very clear upward trending channel for the palladium market. Got a key resistance there at 862, which we actually broke yesterday, 862 US dollars an ounce. We broke through that, and you can see the price at the moment just hovering around 860. So we're probably going to see volatility will die right down this afternoon with Independence Day in the US, but we're closing at the weekly highs here, looking bullish as we go into next week for palladium. Platinum has been a similar story. We've had really decent breakouts on platinum. Broke over 1-year highs this week. We actually spiked, you can see here above the 1500, spiked up to 1517. You can see previous resistance now on platinum, which was at 1494, seems to be becoming support. If you just take a look at the previous levels, which are around the 1490 level, providing resistance, these are now providing support. So we look for further breakouts as we go into next week. We've got very clear upward trending channels here on both platinum and palladium, which have recently broke out really within the last week or so. There's been some fantastic opportunities, and we're seeing some good opportunities to buy each pullback at the moment as we continue to hold this trend line. So as we go into next week, we are looking for a bullish move here on both platinum and palladium, which could follow through, of course, to silver. Copper's looking good, nice breakout there, and gold. So I would be expecting more upside on gold and silver whilst platinum, palladium, and copper continue to break out. If we look at the energies, oils have been very interesting this week. So we discussed this last week as well. We had a key level of support which got breached, the 105 level. Nice psychological number for us to break as well. We did break down from that level this week. You can see just going out on the larger time frame, if we go back to the beginning of March here, got a fairly clear trending channel here that we've had this year. Most of this year has been a bullish market for the oils. We spiked on the Iraq situation a couple of weeks ago, and we've come up to the upper end of this trend channel. We are getting quite a significant pullback at the moment. It's been a very nice move to short. It's been very straightforward, taking a break. This key support zone around the 105 level. If we continue to sell off, there was a hammer put in yesterday on NFP, the 103.65. If that gets taken out there, there's not really too much to support the market from coming down to the 103 next psychological support level here for the oils. Okay, so that will take it down to quite close to the lower trend line. So that is what we're looking at for light sweet crude oil. If we have a look at Brent crude oil, this will seem better set up. You can see very clearly here, nice V-shaped reversal, very symmetrical. When the market does this, then it breaks the neckline, broke support at the 112 level here. So we broke that support, came down, just very straightforward. It's not complicated to take these trades. You can see very straightforward break of that previous resistance and new support, and we're coming down at the moment. Looks like we're about the 110, we're about the 1081 level at the moment. We can take out yesterday's lows here for 110.48. We'll probably see reduced volatility anyway, but I'll be looking for the next key move down to the 110 level psychological support there, previous resistance going back to May as well. So that's the next key level I'll be looking for, just to take out this surge, which we just get a full retracement of this surge, which we got going back to the Iraq situation a couple of weeks ago. So I would be looking to take for just a full retracement, essentially coming down to, let's have a look, to around the 109.37 level would give us a full retracement. So we'll see whether we get that, and we'll see if this trend line does hold on oil, if we just get a continuation and a breakdown of that. If you take a look at the larger time frame, we're still in a major consolidation at the moment between the 103 to 117 zone. But most this year we've been bullish on oil. We've had some decent moves, but at the moment, short-term downward trend at the moment, looking for, you can see this trend line is still bullish, but we haven't had a retest of it in quite a while. So we could get a nice move lower here. Keep an eye on natural gas as well. We did discuss this last week, this support zone, which seems to be for the time being holding. There are a lot of our indicators are showing this a key support zone as well. Just got a raw chart here at the moment, but there's a lot of indicators which also show this as a support zone. So I look out for this on natural gas at the moment. If we do break and get a significant break just below, really looking to take out the 4.327 level at the moment. Again, you can see it's a bit similar to oil in terms of the pattern that we're getting here. You can see if that does break, that's going to be a major support zone to break, and then we'll see a move come down to around circa about the 4.198 level for natural gas. So we'll be looking out for that, or looking for a reversal here to see if natural gas can find support around these key levels and just get a nice bounce as we go into next week and come back towards the upper end of its trend channel at the moment. So you can see it's just consolidating sideways, has been doing for about 2.5 months now. Natural gas just continuing to really just consolidate within this support and resistance zone. Resistance at 4.855 and support around the 4.327 level, exactly where we are at the moment. So there will be a lot of traders who are potentially looking for a nice value buy around this level, and there could be a decent trade to be had once we get confirmation to the upside here. You can see that's pretty decent risk to reward there for a move to the upside. So look out for that on natural gas as we go into next week. Again, volatility will be reduced on that. If we take a look at the US dollar index, we did get a massive spike yesterday on non-farm payroll. The USD index actually doing well to hold on to its gains. We've had some nice sell short opportunities over the last week as we broke support at 80.22. We came down for a circa about a 45-point move. Found support at 79.76. This is where we had some indecision. Just the day before non-farm payroll, we broke out to the upside on Thursday, actually Wednesday trigger, then we broke up on Thursday. This was the move from yesterday, and we are holding. We're back above some key MAs here as well, actually, but we've we've got back above this support zone. So we're sitting about 80.33 at the moment. So US dollar index tends to have its biggest correlation, inverse correlation with gold on major news announcements, which we definitely saw on yesterday's announcement. We got a huge spike on the US dollar index. Gold immediately sold off, but gold is finding support at the moment. If we go back into gold and we just take it down, it's another time frame. You can see we're getting a nice consolidation around the 103.06 level, and every sell-off is being supported. So we didn't break any key levels yesterday, even though gold did sell off. It was very temporary. It was just a knee-jerk reaction, knee-jerk sell-off, found support, and it's back within its consolidation zone. So we'll keep an eye on the US dollar index as we go into next week as well. Potentially a bit of a resistance zone here. The correlation between the USD and gold won't be as strong outside of news announcements. So yesterday's just this initial play there was a breakout on the US dollar index and a sell short on gold, although really we're looking for now the breakout from these key levels. That's what we'll be looking at for the time being as we go into next week. So a break of 30.32 or a break of 13.06. Okay, so we'll just take a quick look at some of the softs here as well. We'll have a look. These are closed today. We'll just take a look. So coffee at the moment continuing to stay within this consolidation zone at the moment. We do have a bit of a trend line starting to form here as well for coffee. So I'll be looking out to see if we are going to hold this trend line as we go into next week. The key level to break there is a 182 level to the upside, and the key level to break at the moment is a 162.38 level for coffee at the moment. We've continued to consolidate for quite some time now. It's been over a month now of consolidation, so we should get a resolution of this soon, but that trend line is holding quite well on coffee at the moment. I would definitely keep an eye on wheat and corn as we go into next week. There's a very key level of support here for wheat, which is at the 50.50 level. So if the 550 level, if we do get a break of that level, we could really start the tank and to get a decent sell-off here. I would look for a potential break of that level, or this is it's an event area, so we're either going to turn around from this level and get a nice reversal and get a move to the upside, or we are going to break the level and we'll get a decent sell short here. So that's what we're looking for at the moment. You can see on the bigger time frame, again, there's quite a lot of a fairly symmetrical pattern here from the breakout to the sell-off. So if we do get a break of 550, this will be a pretty decent breakdown in price, and we'll be looking to take advantage of that. On corn as well, corn just knocking at the door of 415 at the moment. Hasn't broken support yet. Looks like it does want to. If it does break support, next support, really the next major psychological support will be around the 400 level. At the 400 level, we do have a spike low here just going down to about the 8th of January here, where we could see some support around the 406 level, but at the moment, it looks like we'll probably will. If we can just crack through 415 here, we'll probably get a decent sell short. Okay, so that's what we're looking at on corn at the moment for a potential breakdown. We'll see if this does hold 415. For now, it's just about holding. It doesn't need to do much work to take out the low there. Only needs to take out 415.75 in order to take that out. The low was 415. Yeah, that's all we need to do. Just take out the 415 level, and that we should see a sell-off there on the corn market. Okay, I'm just going to go back into the bird's eye view here. Okay, so in summary, really, if we take it from top to bottom, so on copper this week, we got a decent breakout to the upside. So copper managed to hold above the 3.1991 level. We had decent breakout to the upside. We're holding on to those gains. We're finishing at the weekly highs here. So copper is finishing the week strong. If we take a look at gold, gold did get a pullback yesterday. Considering the numbers which came out and the spike in the US dollar index, it hasn't really had that much of an impact on gold. We did get a small pullback, but nothing major. It's still holding around 1321, which is not far off the weekly highs. So gold doing pretty well here to hold its ground, even though the US dollar index spiked yesterday, which leads me to think that next week we could be due some higher prices for gold. If you take a look at silver, very similar situation. We've got a pullback yesterday. We're closing very close to the daily highs here. The daily highs being this weekly high is 2130 level, 2128, and we're at 2114 at the moment. So we'll see how we fare over the course of this afternoon, but it's looking bullish as we go into next week as we close towards the weekly highs. We take a look at also palladium has broken out to 3-year highs this week, and palladium up 25% this year. Platinum also broke above the 1500 level, broke above 1-year highs as well. So we could, again, it's looking pretty strong as we go into next week across all of the metals at the moment. US dollar index did get a good move off yesterday's NFP, which you would expect. We'll see if that continues or whether we continue to sell off within this overall downward trend that we've been in throughout June. If we go over to the energies, I'd say we've had some nice sell shorts over the last week on the energies. We're still short-term bearish on WTI and Brent crude oil until we come down to the next major support levels. There is a little bit of support where we are today from yesterday's non-farm payroll, but it hasn't been confirmed. If we take out yesterday's lows, we should continue to get a sell-off. If we take a look at natural gas, we've got a support zone at the moment. If that gets broken, we should see some nice sell-off there. If it holds, we could get a decent move, a reversal back up to the upper end of this trend channel, which we're just in. It's a sideways trend channel at the moment on natural gas. If we take a look at coffee, we are holding on to a trend line at the moment on the daily. We've got a larger consolidation zone, which we're looking for some further confirmation of. Wheat and corn definitely ones to watch there. And event areas, they're very close to breaking those levels, or they're going to get supported. So they will either reverse from these levels, or we'll get a nice breakdown. So there's some good opportunities on those. The wheats and the softs are closed today, so there'll be some more trading opportunities for those as we go into next week. Okay, so with that, we'll just have a look at the key news announcements as we go into next week as well. So we have on Monday, so today is Independence Day, of course, in the US. Monday, the 7th of July, at 3 p.m. BST, 10 a.m. Eastern Time, we have the CB Employment Trends Index. That report uses data from 8 labour market indicators, which makes up the Employment Trends Index, which include initial unemployment claims, number of employees hired, job openings, industrial production, real manufacturing, and trade sales. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Tuesday, the 8th of July, 8 p.m. BST, 3 p.m. Eastern Time, we have the US consumer credit. So consumer credit measures the change in the total value of outstanding consumer credit that requires installment payments. It is closely correlated with consumer spending and confidence. The figure can be volatile, as it's often subject to sizable revisions. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Next Wednesday, the 9th of July, at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US crude oil inventory. That data reports the number of barrels of crude oil commercial firms have in their inventory this week. We got a nice spike off that when they came out with less oil, which then was predicted in their inventory deficit. So commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And next Wednesday, the 9th of July, will be a big one at 7 p.m. BST, 2 p.m. Eastern Time. We have the FOMC meeting minutes. So that is a detailed record of the FOMC's most recent meeting, provides in-depth insights into the deciding factors that influence interest rates, as well as the Fed's future growth and inflation forecast. A hawkish response should be taken as bullish for the US dollar, while a dovish response should be taken as bearish. Thursday, the 10th of July, we have 1:30 p.m. BST, 8:30 a.m. Eastern Time, US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data, and week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And next Thursday, 10th of July, of course, we have the US natural gas storage report. That's at 3:30 p.m. BST, 10:30 a.m. Eastern Time. The Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. Okay, so those are the key announcements we need to watch out for over the following week. So if you do want to take your trading to the next level and you want to find out more about the Gold and Silver Club live trading room program and our daily trade calls, you can find out more about joining our community and our live trading room just very simply go to www.jointhegoldandsilverclub.com, and you can also contact us at, depending on which office is nearest to you, either our London office, our New York office, our Johannesburg office, our Budapest or our Hong Kong office. You can I'll leave the numbers on the screen very shortly. Make sure you subscribe to our newsletter. You will get free weekly reports on the precious metals, energies and agriculture, so do take advantage of that. And I'll tell you what, I'll leave these on the screen for now. So with that, I wish you good luck with your trading. Probably the rest of the day won't be too active, but you can certainly start to plan for next week's trading opportunities. So have a great weekend. Good luck with your trading, and we'll see you all on the next one, okay? So take care, everyone, and we'll see you back here next week, and I'll leave these details on the screen for you. Cheers. Bye-bye.